Good morning to everybody. I want to welcome you here today. This is our first CIADI Market Update webinar. So trying to use new communication uh, means as we are in a new world. So we want to welcome everybody. Good morning, and thank you for joining us today. First thing, just want to hopefully wish you everybody's doing the best and your family and you are healthy as we go through some times that I never thought we would see. And we'll be talking about that today, kind of where we sit today and how the market is responding to some of the unknowns that we're all going through. So we do appreciate you joining us today and taking your time to listen. We would rather be having a glass of wine or buying you lunch or meeting you in person, but that's just not the way it works today. So we are jumping into doing a webinar, and hopefully that's the way we can kind of give you information about your business, what we see going on, and continuing the communication that we hope continues. So with that, this will be about 1 hour that we'll hold the webinar. We will end on time. We're gonna have 4 speakers today that will help us try to understand the market and where things are, give their perspective. I think some of you have already found it, but if you hover with your cursor and down below, there's a Q&A. And as people are speaking, you can put questions in there. We're gonna go through each of the speakers, and then we'll have a time for question and answer together after that. So we'll ask each other questions and try to get some of those questions that you have of us so we can keep an open dialogue as we move forward. So make sure you participate, and we like questions. I just wish we had more answers sometimes, but that's just the way it works. I want to introduce the speakers. I'll give a little update just in terms of California bulk wine and grape market. We're all gonna, panelists will each have kind of some opening remarks before we go to Q&A. Greg Livengood, who's the president of the CIADI company, he's going to be giving you his take on where the global marketplace sits today. And there's been some changes across the board. So again, this has affected every market from where we work in. We're really lucky to have 2 excellent and outstanding individuals, but excellent speakers and really distinguished members of our industry. So we've got Steve Ronacleve is going to talk about his market observations and consumer insight. Steve's been at Rabobank since 2006. He's a charge of a global strategist for all beverages, and he leads their beverage research team there. And Steve's spoken at many events and provides excellent insight, I think, to how we look at the industry and putting all the pieces together. And then Tony Correa, who's the owner of the Correa Company, probably the most respected ag land appraiser in the state of California, works on vineyard and wineries appraisals, really knows what's going on and has his ear to the ground, as they say. And he's going to talk today about vineyard market update and what he sees going on there. So that's going to be the panelist, and hopefully we can give you some information about what we see going on. So I'm going to start by sharing my screen, and I'll start my presentation. So basically what I'm going to talk about is kind of the California market update in terms of this overall market update we're going to try to give you today. As everybody knows, and everybody's living through it today, we've had this pandemic by the coronavirus. And starting in March, with shelter-in-place protocols that were put in place, we've started to see, closures and restrictions on restaurants, tasting rooms, travel, tourism. So really changing the way the consumer interacts with the wine in terms of the product, how they consume it, where they consume it. And so that's really changed a lot of behaviors. And we're trying to understand how those behaviors have changed to some degree and how as an industry we can adjust to that. I think it's still difficult to understand and predict how these changes are going to affect the wine industry on an ongoing basis, and how long they're going to last. So there's definitely more questions and answers, and we're all going through it. But I think hopefully we get to a point we can understand what this new normal is. As things normalize more, can we make better, longer term decisions by having some trust or faith in what that future will look like? And that's a little bit of what we're trying to get to. I don't think we have answers to that today, but I think as we move forward, that's what we're trying to get to. Hold on a sec. I apologize. Let me see. My screen froze. Okay. Let's try that one more time. Share screen. There we go. And play from start. Okay, there we go. There we go. So next slide, Danny Brager of Nielsen was nice enough to lend this to us, but it looks at just some of the uptick we've seen on the off-premise channel. This is Nielsen data since COVID and the shelter in place. So you can see in March, there's a big jump in terms of overall consumption of alcoholic beverages. The red line is wine. And as we've moved forward, there's been some normalization, somewhere 25 to 30% up in terms of wine consumption on an ongoing basis, given what we've seen, and that's been in the off-premise channel. One of the challenges is, and I think Steve's going to talk a little bit about this on the on-premise channel, that's really collapsed because of the shutdown in so many of those venues where you're going to have wine. And Nielsen's comments are, we need to grow the off-premise by at least 22% just to make up for that loss we've had in the on-premise channel. So you can see there's dynamics that continue to change. And what we want to talk about in terms of the bulk market, how has we adjusted to that, or what's taken place? So when you look at it, since March, bulk activity has picked up. So it's been more active, probably more active than 6 or 12 months prior within there. So we've seen good activity. It's tending to be hand to mouth. So people are buying based on what they need at that moment. They're going to bottle, not necessarily 6 months and 12 months into the future, but what they need there. But there's a dynamic changing in terms of the buyers. So where we saw as people oversupplied, some of the large buyers said, hey, I've got extra inventory. I'm actually going to be a seller on the bulk market. Some of those buyers have pulled back and said, you know what, I'm no longer a seller because I need that wine for my own programs that are growing. We've also seen a couple large buyers that haven't bought substantial amounts of bulk wine in 6 months or a year have entered into the market again. So we've definitely seen more activity and a different set of more traditional buyers coming back into the market on certain parts of it. Bulk pricing has remained firm. I think in general, prices have held fairly stable. We used to see these $2 and $3. I mean, the prices are still low in relative terms, but we're not seeing a lot of these $2 and $3. I just need to move the wine through the system. So there's been a little bit of strengthening, especially in that value segment, things going into California wine products. The premium segment on wine has continued to hold, but there's been a little slippage there, I think, and we'll talk about that. But as that premium end gets hit with some sales numbers reforecasting, I think we're starting to see a little more wine slip out from some of those wineries are saying, I may have some excess supply going forward, but to date, they've held. Mainstays in terms of what's in demand out there has been Chard, Cab, and Pinot. It seems consumers are going out, buying the brands that they know and are comfortable with, and buying the varietals associated with those that they're going to have every day. They're not looking to experiment. They're looking to have something they're comfortable with and can go back to. We've also seen fairly good demand on Russian River Pinot, Chardonnay, and Napa Cab. So those have continued to have a price, albeit lower than most of the sellers would like to see, but the price has been relatively steady. It's going to be interesting there because a lot of that's been driven by private label, and some of that private label business may slow down because what we're seeing is a lot of those on-premise brands are fighting for volume in terms of sales. So they're taking those brands into the off-premise market. And I think that's competing a little bit with some of the private label where you can get a really high-end brand sitting on the shelf. I think it's causing additional competition to some of that private label activity. So there's been a little bit of bifurcation in the marketplace. That value end where well-positioned off-premise brands are growing, where we've seen most activity on bulk and grapes. It's kind of feeding that. On the premium end that are really, sold through tasting rooms, on-premise, smaller size, that's where we're starting to see some weakness. And it makes sense given some of the sales numbers we talked about earlier. And we're starting to see revised forecasts. Hey, Glenn, I looked at my numbers. I need to take them down. because of what we see going on. I've got extra bulk wine or extra grapes to sell now. I need to put them onto the market. So a little bit where on the value side, they're pulling some of that off the market. On the premium side, they're putting that on the market to some degree. This is a slide. This shows Ciati bulk wine inventory. Take a slice from each month, January through May, by variety, and it's got all the varieties, appellation and vintage rolled up in one. So you can see what we show in terms of inventory. You can start to see in June that we've seen some takeaway from that market, especially on cap. So there's been activity which has eaten into some of the inventory we've seen on the bulk market. Also wanted to touch quickly just on the grape market and where we sit today. I mean, I think the biggest thing that we know is wineries have looked for price flexibility and supply flexibility the last few years. And so they've given notice on long-term contracts. And that's put more available grapes in the marketplace than we've seen in a number of years. So growers have a higher percentage of their grapes available. And the market's been slow. So when we look at activity in general to date, it has been very slow. Now in the last 2 to 3 weeks, we've seen some activity. Again, it's been driven more by the California Appellation brands and with buying in the Central Valley. So we've seen some activity on grapes there. Maybe prices aren't exactly what the seller would want, but they seem to work. I think wineries and buyers are being very selective about growers they choose because there's available grapes out there. But that's where we're seeing the activity start in terms of grapes. On the coastal end, it's still slow. We're seeing value buyers come in at opportunistic prices. So I think that'll continue, but the regular buyers right now are still waiting on the sidelines. They're because of these questions about sales and predictions. I think they're really reticent to jump in. And we've seen some of those buyers, as we mentioned, actually have, you know what, I've got some grapes for sale now that 3 months ago I didn't think, I thought I was going to use that internally for myself. So that's where that market's different. Crop size right now looks average to slightly below. It always, depends on who you ask and when you ask them, but it's pretty early, but that's what it plays today, or at least what the gut feel is. I think the biggest challenge we have there is there's really an uncertain future about what the needs are. And so buyers are very hesitant to come in and say, I'm going to buy something that I'm going to use in the future, because they're really not sure what that's going to be until they really understand this new normal. And there's significant grapes out there still to choose from. So by waiting, they're not necessarily losing opportunities. So just in terms of thoughts and what we see, the COVID, at least in terms of the market dynamics in the bulk and grape market, seem to be benefiting some and challenging others, from what we've seen so far in terms of the reaction on the bulk wine and grape market in California. The other thing we've seen, though, is there's more delayed payments. There's really cash flow questions. So people are holding cash and maybe not paying as quickly on some of the monies owed. So that is not necessarily a problem yet, but you're seeing it happen more. Definitely existing contracts are being renegotiated, both price and payment terms, as buyers try to build flexibility in those, given their concerns about where the future is going to be. And then a financial tightening. So I think that's, potentially coming from the banks as they're looking at loan covenants and guarantees and starting to understand risks with that, given the economic situation potentially we're working through as a nation. I think you're starting to feel banks put a little more pressure in that segment. So I'm hopeful that there could be more opportunities as we get a better idea of what this new normal is. So as we loosen some of these shelter in place regulations, and if people go back and get into a more normal established rhythms, things can still change again. So it's going to be a target, that's moving, but at least we may get a better idea of what's an ongoing way to look at that going forward. I think you've got to be willing to be creative with deals and really get through in the short term. I still think it's going to be tough, right? No matter how we look at this and what segment you're in, we'd already had a challenging challenges in place before the new challenges of 2020. But I believe very strongly that in this business, we're all going to get through this together, and we are going to see brighter days as we go forward. So with that, I want to introduce Greg Livingood, and I'm going to stop sharing, and then Greg's going to bring his presentation online.
Okay, give me 1 second here. Thank you, Glenn. Let's see.
We're all learning new skills.
Yes, we do. Okay, I need to share first here. There we go. And share. Okay, there we go. All right, Glenn, thank you very much. I am going to be talking about the rest of the world other than California. It's maybe not quite as positive as things are starting to look here in California, so we'll go through it. We got a long way to go in a very short period of time, so I'm going to jump right into it here. This slide, I just want to talk and make a couple of points here. Getting to the place where we are today as far as where we sit in the supply-demand ratio. 2018, if you look here, you see we had a huge crop in 2018, 292 million hectoliters, which is the biggest crop the world had seen, and that immediately put us into a supply side oversupply situation. Luckily, in 2019, the crop came back to more of an average size, but from a Mother Nature supply side, we went long, and it's taken us 1.5 years to start working through that. Second point with this slide I want to make is, if you look at this graph over here to the right, Italy, France, and Spain really make up a big percentage of what is grown throughout the world. And as they go, we go. So 18 was obviously very, very big for them. 19 backed off a little bit, but we always have to keep an eye on, we talk about Chile and New Zealand and Argentina and all these other places, but you can see the big three still really dominate when it comes to global production. Here, I just wanted to show you that, over the last 20 years, global wine production, grape production may have increased, but global wine production really hasn't moved that much. You see some spikes along the way as we go here, but really when you come back to 2019 and the crop size we had there at 263 million hectoliters, we're basically right back where we were in 2000 and 2001. So there's been a lot of change in the vineyards. We're seeing different varietals. We're seeing vineyards go up in different areas and maybe come out in other countries. But overall, we've been fairly static on our overall production. Today, current supply-demand situation, the market is currently in a very long position. We definitely have bulk wine in excess throughout the world at attractive prices to buyers, which is another way to say that we have pretty cheap pricing out there. Not all supply countries are long. I think, you could pick and choose a few countries out there that aren't very long, but we do have several that are in a really severely long position. Long-term consumer demand was already a concern prior to this COVID-19 crisis. Certainly with the economic fallout that will follow, we're going to have some demand issues. I heard on the radio this morning that over the past couple of months, the US has lost somewhere in the neighborhood of 41 million jobs here alone. So certainly there will be some demand fallout from that. As I mentioned, the 2019 harvest was slightly smaller than average. That certainly helped us get into a position to deal with what we have to deal with today. And a smaller 2020 Southern Hemisphere harvest, which we have just experienced, certainly will continue to help in that situation. Uh-oh, now I got the same problem, Glenn. I got a frozen screen. Oh, there we go. Moving forward, all right, let's talk about some of these countries very quickly as we go. So Chile, harvest expected to be down 20%. All of these harvest numbers are estimates at this point in the Southern Hemisphere. None of these are official. That decline in number is coming basically from two things in Chile. One, we have a historic drought taking place down there. It's not getting any better. It's been several years, and so that is something we need to continue to look at. And also, they did have spring frost, so down 20% there. On the demand side, Chile's had a tough run over the last 9 or so months. Starting in October, they saw very severe civil unrest, and they experienced curfews for much of October, November, and December, which led to a decline in on-premise sales, of course. After January and February started to see a return to normal, they got hit again like the rest of us with this COVID-19 crisis, went into quarantine, and on-premise sales are virtually non-existent at this point. Despite an increase in grape prices that we saw due to the lower harvest expectation, the lower yielding harvest expectation, we now see bulk prices that have actually fallen from where they were this time last year. So producers are somewhat getting squeezed in the middle as they have somewhat higher costs, and now they're facing lower prices. Some of that has been mitigated by currency exchange, but even that is starting to fall back a little bit with what's happening in the US. So for Chile on the positive side, I would say North American bulk sales have been very strong. We have brand owners here that do have some bulk wine that comes in for certain brands, and those have done very well. China continues to be a good buyer for Chile. The big problem down there on the demand side for bulk suppliers would be with their European buyers. European buyers are taking a much more conservative approach. They're not quite filling those tenders the way they normally do this time of year. And that's what's causing for a little bit of a decline in demand and concern about the oversupply situation. Across the Andes, again, harvest looks to be down about 20%, which isn't necessarily a bad thing considering domestic demand has steadily declined over the past 5 years due to ongoing economic and political uncertainty. Export, the result of that economic uncertainty and the decline in the domestic demand has made export much, much more important to Argentina, which right now that's a good thing as the prices are very attractive for export buyers. And the big difference in Argentina, I would say today, is the quality of bulk wine that is available for export is really, really very good. And that probably isn't something you could have said 5 or 10 years ago. So it's a great place for buyers to go look today. Unfortunately, there are still questions about the economy there, more than just this COVID-19 related questions. We have a big date coming on June 12th as Argentina once again tries to restructure their debt problems. So we'll see where we go from there. Moving on, Australia and New Zealand. The Australian crop also looks to be down about 15 to 20%. In addition to that, with all the horrible bushfire problems they had, smoke taint issues likely will magnify that decline in supply. So the effective rate will be somewhere above 15 to 20% of what's available out for the marketplace. They, as well as like Chile, had a very strong grape market going into the harvest, but now they're starting to see a little bit of demand pressure themselves. China is their big trading partner, and very recently there was kind of a little bit of a political fallout as some Australian politicians have called for investigations into the origin of the pandemic, and the Chinese politicians didn't like that. And so they've put some tariffs on some agricultural products, but they've also mentioned that perhaps there could be some sort of a boycott on Australian wine. So that would be very damaging, obviously, to the Australian industry at this point. Over in New Zealand, crop looks to be down on producers' estimates, but actually pretty near historical averages. And prices, therefore, have held pretty well. Demand for Sauvignon Blanc does remain strong throughout the world, but they are in a little bit of a precarious position because that Sauvignon Blanc is a much higher price than almost every other bulk wine that's sold at the commercial level throughout the world. So given what's happening today, we're gonna have to keep a very close eye on where that goes. In South Africa, harvest was up slightly, or does look like it's going to be up slightly, which isn't necessarily welcome news as demand has declined fairly significantly over the past couple of years. The South Africans suffered through very difficult drought years the last few years, and so they've lost, as they lost production and prices increased, they did lose a lot of market share in the bulk market, mainly in Europe. So they've got a lot of work to do to make some of those sales up. This market was probably the hardest hit by COVID-19. And the reason for that is the local government reaction was very, very strong. They did go into a full quarantine. And not only that, but all domestic alcohol sales were halted for the entire time they were in quarantine. In addition to that, export shipments of bulk wine were halted 2 times over a 2-month period for a lengthy period of time. So wine is really backed up there as they try to dig themselves out of this. Little plug for them. They do have great Sauvignon Blanc down there and some really nice white wines, and prices are extremely attractive today given currency exchange and the amount of available wine down there. So have a look if you're a buyer. There's some great opportunity. And then finally, as far as trip around the world here, and the big 3 in Europe, a major distillation project was announced by the EU. It looks like they're going to distill a combined 750 million to 1 billion liters. And that is all subsidized by the governments there. A lot of that is marketing subsidies that weren't used during the COVID period or the quarantine period. And again, this was an aim to drop some of that supply back, that some of it still hanging around from that huge 18 crop. The bulk market, from a demand side, it's been pretty slow there. Each of the big 3 have been slower than normal, and so this distillation thing is certainly welcome. Europe is very dependent on on-premise trade, and so this has hit them particularly hard. And as they emerge from quarantine, we're really hoping for a big boost in tourism, and that should help them start getting things back on track. So finally, some obstacles and opportunities in the global market. First off, global politics, trade disputes, civil unrest. These are all things that as a bulk producer or a buyer, you probably weren't worried that much about 5 years ago. Today, wine seems to be involved in all of it. We're hearing, anytime there's a trade dispute, somehow wine gets thrown in there. I don't know what we did to all these places, but the Chinese are talking about wine tariffs on Australia, and we're putting tariffs on French wine, and it's going all over the place. And then obviously we have civil unrest all over the world, and those disruptions to sales and on-premise and shipments certainly are things that we all need to monitor today like never before. The smaller harvest was welcome in the Southern Hemisphere, and that's great. But now we have to start looking at the big 3 in Europe and the US and see where those harvests go. We certainly, given where we feel demand is today, it probably would be best if all 4 of those regions had slightly smaller than average harvests. As far as an opportunity and a final thought here, in all this global trade and all these markets that we talk about where bulk wine's moving around, we're really mainly trading in value wine. And that's wine that could just as easily be sold in a box as it is in a bottle. And after years and years of talk of premiumization and consumers trading up and out of the value tier, the current economic situation and the situation that we see kind of looming out there in the future tends for us to believe that there may be more demand for value wines going forward. And that could help some of these producers dig themselves out of the current oversupply situation. So with that, that's my quick trip around the world in 10 minutes. Thank you very much. And stop my share there. I'm going to kick it over to Steve from here.
Thanks, Craig. Really nice to be here, and thanks to both you and Glenn for the invitation. I really appreciate it. I think it makes being on a panel with you and Tony and Glenn makes me look smart by association, so I appreciate it. But no, and I didn't bring any slides, so you just have to look at my mug and maybe focus on my background. It's Letchworth State Park in upstate New York. But I wanted to spend a little bit of time this morning kind of talking about the need for the industry to start now rethinking the route to the consumer, because I think, one of the questions I get a lot is, when do we get back to normal, right? And I think Glenn touched on this, and clearly the pandemic has been really disruptive to wine sales. We've seen significant losses in tasting rooms and the on-premise, and a lot of growth in the off-premise, and Glenn touched on some of that stuff. But you know, even some of what we see in the Nielsen numbers probably overestimates a little bit the growth in the off-premise, because what it's showing is measured off-premise, and it captures a disproportionate amount of what goes to, you know, big box and major grocery and so forth, where a lot of the smaller independent wine shops aren't really getting measured, and they've kind of under-indexed on that. But overall, I think, you know, we're probably privileged, as Greg kind of touched on. We're at least kind of flat volumetrically, but we are losing a lot of revenue. And so I want to take a little bit of time to think about the need to rethink the route to the consumer, because really, barring some unforeseen changes, I think we're facing a major shift in the way that the consumer engages with the wine industry, and we really need to prepare for that. You know, some of our clients, and I think it's relevant to raise this, because some of our clients, you know, even from large to small, have kind of expressed, well, if we can weather out the next month or two, then we'll get back to normal. But I think it's really unlikely that the current challenges that we're facing are really going to be overcome in the space of a couple of months. And that's really around the challenges, because of the challenges in the on-premise channel. And I think that the recovery in the on-premise channel is likely to be measured in years rather than months, and it will look very different structurally moving forward. And we need to be kind of preparing for that, because it is a critical point of access to the market for smaller brands, and it is a premium channel, right? It's where, you know, it over-indexes on more premium wines, and it's a critical margin for everyone. Am I lost? Do you guys hear me? Tony, do you hear me? Okay.
Yep.
Sorry. Okay. Okay. You know, I just want to make the point that it is a premium channel. It over-indexes on more premium wines, and it's a critical kind of channel for margin for everyone. And, you know, we've talked to, we've talked to even large suppliers that have great brands that are doing really well in the off-premise, but that are still struggling because their losses in the on-premise, where they make a lot of their margins. And so, you know, we look out, we hear a lot of optimism on this. You know, the on-premise is starting to reopen. There's a lot of optimism, but, you know, we kind of look at it and think, you know, the on-premise is reopening, but it's still, you know, this is not going to bring us back to normal. We're reopening with a lot of social distancing measures. You know, those things are in place, and bars and restaurants have really high operating costs. You know, if the surveys that I've seen and whatnot, usually they talk about needing to have 70 to 80% capacity just to break even, right? And the Brewers Association, Bart Watson, if you ever look at some of the stuff he covers, but they did a survey of their constituents, you know, saying, you know, the microbrewers saying, you know, how long could you sustain business if social distancing measures stay where they are now? And about 60% of them said, you know, they wouldn't last 3 months. So there's a lot of pressure, a lot of challenges facing the industry right now with social distancing measures in place. So Tony, if I drop off, just because I only see you right now, and I keep seeing that it looks like I'm getting bumped. Am I okay?
You're okay from here.
All right. So I think one of the challenges is that, you know, the social distancing measures that are being forced right now are a challenge. But even without that, you know, what we're seeing is, you know, even without government enforcement, there's still a large chunk of consumers that are nervous about going out. And that will not go out even after social distancing measures are being enforced. And there was a great survey by Nielsen that said, oh, you know, 88% of consumers that have gone out have had a great experience. And that's great. But if you look at the numbers behind them, it really skewed very heavily to younger consumers. And it was only about 6% of people 55 and over have gone out to a restaurant, even now that they've started opening up. So, you know, we had this challenge where bars and restaurants need strong capacity, and we're not going to get it because there is that shift of consumers that are nervous about going out. But then the other thing, and this started even before all of the social distancing measures, that restaurants are shifting to takeout, shifting to delivery and so forth. That was a trend that was in place, but has been accelerated by all this. And with that, that's a place where wine has not traditionally played very well, and we're losing, wine's share of restaurant sales look likely to decline. But then there are even, the other things, kind of structural changes that come out of this pandemic, where you're seeing an increase in working from home, decrease in business travel, and think about all the on-premise locations that are dependent on that are going to suffer in the wake of that, right? And we're seeing consumers kind of saying, hey, if I'm going to be working from home now, I don't even need to be in city centers. I can start moving out, and thinking about all of those implications and what it means for established on-premise locations. So that's what we're kind of seeing with the on-premise. And then we have a whole, series of knock-on effects from that, where it's, and my colleagues are kind of looking at this. My colleagues that kind of look at the food service thing, and they're saying, we're probably in the U.S., it's going to take us probably 10 quarters to get food service back to where it was to 2019 levels at the most optimistic. So that's, 30 months out. And even with that, that recovery is going to be led by QSRs and takeouts and so forth, and full service restaurants are going to under index in that. So we've got a real challenge in the on-premise kind of even moving forward. So, yes, consumption volumes are stable, but, revenues are under pressure, and particularly the channels that premium wines have depended on are really under pressure. And, as operators start to open up, they're looking at kind of restricted numbers of occupants that they can have in, their restricted occupancy, and they're looking at saying, okay, then I can't have that same assortment. They're going even there, like we've seen in the off-premise, that shift to the bigger brands. We're seeing that even in the on-premise. So we're seeing a lot of SKU rationalization, and within the wholesaler tier and retailers, and even in the on-premise. And that's part of the challenge that we have moving forward. And then there's just this massive, and I think it was touched on, this massive accounts receivable that wholesalers have with their on-premise partners. And there's, that's going to create a lot of challenges for the smaller wholesalers and a lot of consolidation. And so I think anyone who's kind of dependent on the on-trade is really going to need to rethink how they connect with the consumer. And, part of but within all of that and the negative story, the one bright story has been kind of the rise of e-commerce. And, we've spent a lot of time looking at the e-commerce channel in the last couple of years. And, going into, even in 2019, we kind of looked at, beverage alcohol sales online worth about 2.6 billion and growing 22%. So small, and I raised this the other day, and John Moramarco kind of tapped the brakes and said, wait a second, there's no way e-commerce kind of compensates for the loss of on-premise. And it's true, right? This is not something that's necessarily going to offset all the declines in the on-premise, but it is a strong growth. It is a strong growth channel, and it's only accelerated with the pandemic. You've seen Drizzly report, April sales up 800%, Wine.com up 350%, Instacart. So I think we need to start thinking about, in a world where the consumer is having more occasions at home, how do we connect with them? How do we become part of that? I think that there are a lot of opportunities for us to rethink how we connect, and opportunities for us to really, if you think of connecting with consumers directly in those occasions and capturing in some ways, the restaurant margin on some of those things, we can deliver, the consumer will not have the same experience that they would have in a restaurant, but we can give them great wines at really attractive prices if we can find new ways to connect with them directly. And I think e-commerce is part of that solution as we think moving forward. But there's plenty more to say, but I think with that, I should probably draw the line, and we can come back to it if there are any questions. But with that, I would love to hand it over to my friend Tony Correa.
Thanks, Steve. Am I on?
You are indeed.
Wonderful. Well, it's interesting. I'm just dealing with the vineyard market, and I want to just stop and think for a minute about, a year ago from now, we were all worried about the overlap of the 2018 crop and the huge bulk inventory and who was going to be buying grapes in the 2019 crop. And then 6 months ago, we had digested the 2019 crop, and we were making the same concerns. You know, we were dealing, what are we going to do with all the bulk wine? Who's going to buy the grapes? Half of the grapes out there seem to be homeless. And now, in these last 3 months or 4 months or 5 months, whatever it's been, we've had this new virus show up. I kind of think of it, it's like red blotch for humans. But our concerns have become much more primitive and elemental, survival, you know, safety of your family and how to get a haircut, for God's sake. But we're still dealing with, you know, there's still a lot of overlap from the 18 crop, and there's huge supply and demand imbalance. And that means that a lot of grapes are uncommitted, uncontracted, and growers are worried about selling their grapes. And some growers made bulk wine and they're still worried about selling the bulk wine. And the lenders are concerned with their growers' financial viability, of course, and all this creates more and more uncertainty. And, you know, there's increasing motivations for some property or vineyard owners to actually, you know, sell assets and sell their vineyards. But if we go back down to 2018, you know, the first supply and demand imbalance that we really saw was down in the Central Coast, and probably the Paso Robles area was the greatest concentration. And that's where we began to see, you know, pressure on growers to do something else, make some hard decisions. And that's continued. So we've seen most of the vineyard sales that I've seen recently have been down on the Central Coast, and many of them are opportunistic buyers taking advantage of a situation and thinking they can make something happen out of it. But one of the things that happens down on the Central Coast, which is a positive for that area, is that most of the vineyards are planted on land which is suitable for alternative uses, which is not necessarily the case in the North Coast. But in a lot of the Central Coast, clearly in the Salinas Valley and other areas of Santa Barbara, San Luis Obispo, if the vines aren't making it, you can pull the vines and plant vegetables. You can lease the land out for a good solid cash flow and just have vegetables on it. Moving back up to Sonoma, we're not seeing hardly any vineyard sales happen in Sonoma, and certainly nothing of any commercial size. And that's been for some time now, and I'm still curious why we don't see more activity. There are some things, there are some deals that are pending, people that are looking at stuff, but the deals just never seem to get done, to happen. Carneros is very quiet, and Carneros, the demand has, you know, tapered off from a lot of the Carneros properties. The focus has shifted down there. Now folks are more interested in Carneros Chardonnay rather than Pinot Noir, and that's been happening for a couple of years. But Napa Valley, we've seen several deals happen in Napa Valley, some of them that were started before the pandemic hit, and some of them that were actually negotiated during the pandemic and have actually closed. But Napa Valley is truly a unique area. It's a very small vineyard footprint area, and there's huge worldwide recognition of that as one of the true premium sites in the world. And so there's always buyers for Napa Valley vineyards. The pricing may change a little bit, but as long as I've been doing this, we've never seen a real cratering of values in Napa Valley. Sometimes it plateaus, and that's what I think we're seeing right now, is the market's more or less plateauing. The last 4 or 5 deals that I've seen have all been the same price range, which is still a healthy price range. But it's, you know, we're not seeing $500,000 an acre today, which we might have seen a year ago or 2 years ago for some of the premium vineyards. And one of the things that happens when we go into these downturns on vineyards, the opportunistic buyers with capital, and that usually translates to the investment funds, This is a great time for them to buy an older vineyard that doesn't have contracts, pull the vines out, and redevelop. And so they're redeveloping during the down period, so they're not worried about the fact they can't sell their grapes this year or next year or the third year after. But then they'll come back online, they'll come into production when hopefully the market has rebounded, as these things tend to cycle over and over again. And they'll be in position with a good, strong, young vineyard, and hopefully with the right variety for the time when that comes around. One of the questions that comes up is vineyards, the value of contracts to sell the grapes as a vineyard is on the market for sale. And that's a two-edged sword, because there are some contracts that are offered out there with vineyards that are not really viable. The grape prices aren't strong enough, and the investment funds are still out there with big bags of money ready to invest, and they still like vineyard properties, but the numbers have to make sense. And the reality today is that a lot of the grape prices that are being offered today don't justify the vineyard values that people are used to seeing over the last year or two or three or four. And it takes an adjustment to the new reality. The property owners, the sellers of vineyards have to realize that the grape pricing today doesn't support yesterday's values. And as an old tenant, I've always said is the wine prices drive grape prices drive vineyard prices. And we're all hearing the same thing, that it appears that market is shifting to lower priced wines. Lower priced wines mean lower priced grapes. Lower priced grapes mean lower priced vineyards. And we always want to like to have a positive spin on things. And the positive thing from my perspective is, after a couple of years in this game, these things always come back around. The market always cycles back around. I was talking with a savvy guy yesterday, and he was saying, I'm projecting that by 2023, we'll be in the same place that we were in 2018. Maybe not as high as we saw in 2019, but by 2018, we'll come back around again. And I think that's a realistic expectation. The question and the issue is just making it through this year, next year, or however long this downturn lasts. And I've talked to a lot of folks who would like to be buying vineyards, but they don't have the cash because of the squeeze that's been happening, and they don't have the cash flow to justify any debt to make additional acquisitions. So they're just sitting back and sitting on their hands and waiting for this thing to kind of cycle through. So that's all I have to present, and I see we've got quite a few questions. Glenn, are you going to take questions?
Yeah, we'll do. I mean, we'll see how many we can get to, and then if those we can't get to, we'll try to get to you offline after the presentation. So a couple people have kind of asking the questions about where do we see, here's one, maybe just for the full panel, and see if there's some comments. Have you spoken with Nielsen or IRI about what they feel about the trends for 2021 or until a vaccine is released? And so I think there's a couple of questions about future projections. Where do we think this is going to go as we look at 2021, even 2022? So pretty tough question to answer, but I didn't know if anybody wanted to take a stab at that. Steve, you're on mute.
Steven?
You're on mute. Yeah.
Mute. Is that better?
Yeah, we can hear you now. Yeah.
Oh, nice. Oh, nice. Maybe it's better if I stay on mute, right? No, in terms of having discussions with Nielsen, we do a little podcast called Liquid Assets, and we just had, the next episode coming out is with Danny Brager, and we had a great discussion with him, really interesting. But I think, Danny kind of, we tried to pin Danny down on projecting where things are going. And I think he's really reticent to do it. I think he looks at, we had a great discussion on kind of how things played out in the last recession and what that means for this one. And I think, at least Danny was reticent to say, yeah, I think it's going to be X, Y, or Z, because I think this pandemic, there are just so many things that are different from the last time around that it makes it hard to predict. But I do think, I think after, it depends on what you mean. On off-premise sales, I think once things start opening up, you're likely to measured off-premise start to decline. Rates will likely come down. But I do think off-premise continues to outperform on-premise for quite some time moving forward. I don't know if anyone else has anything different to add.
Well, the only thing I would say, and I don't have the numbers on top of my head, but John Moromarco at Gomberg and BW1, he did a 166. He did some prognostication that he said smartly, it'll be wrong in the future, but it's a stab. So he did look at some of that. So I think you could reach out to him, and he did a presentation about 3 weeks ago. There were some interesting estimates of what that could be. Hey, Greg, we have a question about what is Europe with that distillation product? What are they gonna, there's two questions. I'm gonna give you two here, but what are they gonna do about that distillation product? Where's it gonna go to? And then there was a question too about the balance between on-premise and off-premise, like it is in the US. Is that, kind of from a European, because you were making the statement that they might be more affected because of their on-premise. There was a question, is it any different than it here is in the US market? So
the first question, I to be honest, I don't really know where all that distillate will end up. I'm sure they have programs that they use that for over there that are not necessarily beverage programs, but I don't have the answer to where that roughly 750 million to billion liters, as they distill that down, where that will go. But certainly we can ask our people over in Europe and find the answer to that. The second question, the numbers that I've heard as far as on-premise, off-premise in Europe, if we're 1 out of every 10 here selling on-premise, they're 3 out of every 10. So whatever that percentage, if that's the actual number, they're about 3 times more than we are. They're more dependent on the on-premise trade.
Okay. Sounds good. Thank you. And then Tony, I was trying to get you a question here. It says, what is your opinion on the number of acquisition opportunities on the Central Coast? What varieties are the most opportunistic, and what will be the valuation trends? And when do you think the bottom will be? Sounds like there's an investor looking to get in, but so.
Well, if I knew all those answers, I wouldn't be working for a living.
Yeah.
I think, a lot of those questions are kind of specific. There are certainly opportunities in Pinot Noir, Chardonnay, Cabernet, wherever, depending on where you are. I think that I've always been a big fan of the Salinas Valley because of, the flexibility to go with vegetables or vineyards. And I've seen some very clever acquisitions down there. And one of them was, I thought, a very good deal because the seller gave a strong contract to buy back the grapes. So the thing made sense from a financial perspective. And if you can find something like that, if you find a user that is willing to pay a reasonable price for a reasonable yield of grapes, well, then those kinds of things are great opportunities. I think some of the Santa Lucia Highlands, of course, is a very attractive area, and I think we're seeing some clever deals done there. Santa Rita Hills down in Santa Barbara. Santa Ynez Valley is seeing a little bit of activity down there, and it makes a lot of sense to me. You're close to the urban center of the wealth center of Los Angeles, but it's just finding the right deal in the right spot. There's a lot of trauma still in the Paso Robles area because there's just an awful lot of grapes that are uncommitted. And then compounded by the water situation. And that's one thing I didn't mention is the water deal is becoming very important in California. It's the primary driver in the Central Valley, but down on the Central Coast, it's a real item of concern because land with water right entitlements is worth probably twice what land without it is. I hope that's a vague enough and long enough answer.
That was good. You hit the time. You got the time right. So that was perfect. There's a couple of questions I was just going to maybe talk about. One is, the California bulk wine excesses. What is the CI's opinion on the split between value versus premium volumes? And I didn't break that out on the slide, but I do think what we're seeing is the value end is there's less slack in that, and that slack tends to be moving now where there's an excess more of in the premium volume. So as this continues to go on, I think it's being said by the panelists, and value is the driver and more in demand, that's going to tighten that part of the marketplace and potentially put more burden on that premium end as we go forward. There was another question about, what's happening to some of that coastal supply on the bulk side and even on the grape side. And I think what you're seeing, and we had been seeing this for a year or so, is some of that coastal supply is moving at California prices for California programs. So just because it's coastal, there's a cost into it, but the market is the market. So some of that is you may have coastal Pinot, but that could be going to a California or competing at Valley pricing for certain needs by certain brands. So we're seeing that take place too, where people are moving down in the market to move through inventory. And we think controlling inventory is not a bad thing to do, especially where we sit today. And then let's see. Then Steve, or maybe just for everybody, this is a question. How backed up do you think inventory is on the on-premise channels? Even with some sort of reopening, will new purchase be limited for some time? And I think you probably touched on that, Steve, a little bit, but maybe just to reiterate that.
Yeah, I don't have a good feel for how backed up. They're going to have to work through as they reopen. They're going to have to work through a lot of that stuff. And, the other thing is that, wholesalers are reducing inventories as well, right? Everyone is trying to conserve cash right now. And so there's a lot of moving pieces in this, and that kind of needs to be worked through. I don't think I have much more to add to that unless you guys have something.
Yeah, no, I think the challenge becomes when we look at the future, as we all talked about, it's pretty hard to predict. And so, there's a lot of good questions about what's going to happen. And I think, as Tony said, if we knew all that, we'd become, we'd be buying the property. It's a tough market to look at, tough to understand, where that goes in the future. The other, we did have a question about how many acres have been removed, and is enough acres have been removed to balance the marketplace. Oh, and then we did have one about we showed volume of bulk inventory. At Ciotti, we think we're the largest in terms of representing bulk inventory. So that's our numbers. We think that covers basically virtually all the market in terms of what's available. I did have a chance to get some insight from my text phone. So according to Mr. Bitter at Allied Grape Growers, and he didn't tell me I can use this or not, so apologize, you didn't get back to me. But he thinks about 35 to 40,000 acres of wine grapes have been removed since last harvest, probably split about half and half between coastal and valley. From his perspective and what he presented at Unified, he thinks we needed about 60,000 acres to be removed to really get back to more of a balanced position. So we're still short of that, because there was a question about, do we have enough acres removed? Did you guys have any comments about, vineyard acres removal, maybe changes that we need to see happen in the industry? I know, Steve, you talked about structurally and where we sell wine, how we interact with the consumer. Any other just general comments?
I think what the trends that you've seen, the demand for for more kind of California varietal, that, you know, that plays into the trends of the last couple of months of, you know, retailers really focusing on big brands. They've been focusing on, you know, as we've talked to a lot of our clients and wholesalers and whatnot, they're saying retailers are all focusing on a very limited assortment of the top brands, right? They're under a lot of pressure. They've been under a lot of pressure to keep shelves stocked. It's been a challenge for them, keep their places clean and so forth. And they have a lot more traffic. It's been challenging for them. So I think that's, you know, they've kind of really limited and kept out a lot of the lower rotating SKUs. And I think that's where that kind of plays in. I would think, you know, I would, obviously where we're going to be in a couple of months is very different from where we've been the last couple of months. So it's, you know, you don't want to take what's happened during the shelter in place and say, this is what we're going to have moving forward. But clearly things will be different, but it's not going to be where we have been the last few months.
Yeah, I think that's a great comment, right? The unknown is kind of what we're all trying to understand so we can make better decisions. So, hey,
Glenn, can I just add one thing to that? So I would say, as far as what's in the ground, we also have to remember in 2018, that crop was so big on the coast, you know, you almost can't even plan for yield like that. So we have, you know, and we weren't sitting in a dramatic oversupply situation going into that harvest. We might have been slightly oversupplied, but when that thing hit, that really hurt. So the question is, you know, every 5 years, 7 years, are you going to have another one of those? It's very, very difficult to pull all the vines out of the ground because of a 1 year bumper crop.
No, it is. I mean, and again, we all based on average, and we never get average, right? So that's how you predict, and it never, you know, that's why it's never exactly as you want it. So, hey, I want to make sure we're honoring everybody's time. We will try to get back to the questions if you've asked offline after this. If you found this interesting, let us know. We can potentially do more of these in the future as a way to kind of communicate with clients and with the industry as what we see going on. Thank you to all our panelists. We appreciate your time and effort. To all the people behind the scenes working to make sure we look like we know what we're doing when we come on the video and the video works. And then just to everybody listening, thank you for your time. We do appreciate it. And the best of health and wellness to everybody as we go forward. So thank you very much and have a great rest of your day.